All right, hello guys, and glad to have you on board again today. Sorry for the little delay. I generally tend to publish the intraday video on Wednesday morning, which I failed to do yesterday due to a very tight schedule. Anyway, without further ado, let's jump in and have a look at more intraday chart perspectives, H1, H4, and kind of the intra-week context. Anyway, not releasing yesterday isn't a big deal because the actual only catalyst this week is all about is the CPI number released this afternoon. There was lots of expectation around Fed Powell speak, but actually turns out not to be that big of a deal. It was back on Tuesday. Still, so the CPI could still be a thing, even though remember what we've said on the longer term vision for 2023 on the yearly briefing. We clearly stated that inflation is now broadly expected to go down without, of course, breaking some significant support level. There are still fundamentals pushing the inflation to the upside. So until further notice, inflation is cooling back down to the level of support of intrinsic inflation pushers like the supply chains, who are still far from being perfect, even though the situation generally tends to improve. There's still the situation as well in Ukraine, which is consistently rising price level in a general manner. So that's the thing. We're still going to see, despite the fact that numbers could flush far away from the market forecasts expectations, which stand at 6.5%, far off the 7.1% of the last number, which is probably going to be expected to be revised to the downside as well. So we'll see all about that. But the thing is that until we get a clear change of direction from the inflation numbers, there is a general consensus that the inflation spike is far overdue now. Though the thing is that we've moved to another area of concern, which is more like how big of the damage is going to be done by the Fed's rate hike of 2022. Specifically, right now, the number one target is, are we going to actually see all of those layoffs in the numbers? Though we would like to see them in unemployment and so on. So I've actually have my personal level of concerns on that front, because I think the data we're getting from the labor statistics and all of these things are basically full of shit. Because yes, we clearly see the layoffs, but we still don't see the numbers moving. So there is really something sketchy going on in here. But I'm not going to go into these details for those intraday perspectives. So that's basically all about it. The market is headed for job numbers this year more than CPI. So it could still be a little bit of volatility today, but I don't necessarily intend this thing to be just as big as this theme was back last year. So that's it. Though in a chart perspective, if we have a look at our big boy S&P 500 on a 4-hour chart perspective, I think we have kind of succeeded a big move, breaking out of this kind of weird type of consolidation that's been lasting in the early days of that year. We're reaching out the first resistance level. We've managed to cross the rising 50% context, which is still good. We're terminating the full cycle in here. And if you remember what I said on the weekly briefings and stuff like that, is I don't play this game in a single straight line for 2023, or at least not until we reach out the actual Fed pivot. By pivot, I don't mean rate cuts. All I mean is stopping rate hikes. So, like we said, it's likely going to occur on the 22nd of March, which is expected to be the last rate hike. But there will still be kind of a question mark on top of it until the next meeting, which is going to be early May. So kind of in that timescale, I don't think the market is going to rally any direction. I don't think we're going to stay flat either. I just think there's going to be a slightly upward move with ups and downs, with basically rising peaks, rising troughs, but still kind of a big retracement anytime. So I expect the market to retrace 50% of what's been done at least. And this is, and that gives me kind of a retracement back to the previous tested support in here. And I definitely think that this is where we're headed back. So for that reason, basically, you would see that we're reaching out for a contracting volatility boundary in here, which I definitely think is an appropriate area for profit taking, which is exactly what I'm actually doing earlier this morning. Tiny profit taking. Basically, I've had to buy multiple times in here because I bought in here again, and probably there has been a third attempt. I think I bought 3 times. So basically, my entry price isn't that good. And in that perspective, that means as currently the stop losses still have to be at the lows, there is still far from enough money in the bank to me to actually do this. So I would like to pay for my stop loss. Therefore, I'm just taking something like a third or 33% profit takings on these trades to pay for the stop loss, let it consolidate. And of course, if we consolidate enough, having kind of a 1 hour chart time frame range of some sort, I'd like to see. Okay, give it a second to plot. All right. What I'd like to see is reaching back to the support context with a mature range on the lower time frame. So I'd like to kind of basically touch the trend channel multiple times, consolidate right back down to this supportive area, like I said, around 50% retracement. That doesn't mean we have made the top already. I still think that the signals that we've had yesterday are not that strong. As you can see, this is barely just overbought at the end of a cycle. It's totally normal, and the momentum is still fairly freakingly solid. So in that perspective, I still think there are probably higher levels of valuations that can be reached out to today or during the following days. So it's not a rushing to the exit door now because I fear of a market downturn and so on. It's just, well, there's going to be a CPI, and I would like to lock in the gains before that. So it's just that way. Financing my stop loss, still thinking that there is a high chance for us to build a higher low point in the H1 timeframe. So just waiting for the time to do its job, to let this market retrace or consolidate flat or whatever else. I mean, if it keeps going up, I'm still 66% in, so this is definitely good anyway. So that's the way it is. So kind of cautiously optimistic ahead of that CPI number and for the days to come, because I think, yes, the market has had quite a good move to the upside. I still think there is upside potential, so it's too soon to call for the bears, but I still think it's not necessarily a risk to take for the bulls. So kind of start locking some gains. It's definitely not an area to buy. We're trying to accelerate. We've done some pretty good job. Remember that on these current market context, I think this is all about 2 steps ahead, 2 steps forward, 1 step backward, 2 steps forwards, and that's the way it goes. So don't necessarily think that it's going to be like a sprint to the final line. It's not the way I see these things. It's really more like, yes, more upside than downside, but have to lock partial gains and risk manage tightly in the process. So that's it for the S&P 500. In terms of volatility, well, I would say I have been noting this channel, which could have acted like a flag, and I was kind of expecting, okay, if something goes wrong, we could eventually surge right back up. Tends like the market doesn't go for that option, and we've kind of traded as a triangle, which is still a good sign. Remember that, in my personal opinion, the goal for this first quarter, or at least first couple of quarters in 2023, are going to be breaking through the 20 in terms of volatility support levels. Over time, as things should start to cool down, and remember what we said, it's not going to be an easy task. It's probably going to take a few months to get there. But this is probably the direction where we should be headed to as problems start to solve one by one. Though this is mostly not necessarily solving problem, but just the worst possible end of the world type of anticipation being invalidated one by one, not because the things are doing great, but just because it's not as bad as people thought it would. And in that perspective, volatility should cool down in multiple ways, but throughout the year, headed in back into the more historical levels, which are standing at an average 15 for the volatility. So this is where I think we're headed in 2023, without necessarily the way we were doing it back then, which was like QE fueled, in which we were going straight line down and having significant and consistently low levels of volatility. I think this is going to be kind of a harsh market going ups and down, and I still don't think we have a chance to reach out that level prior to the second semester. But until then, still I think volatility is showing signs of improvement, which is one good sign. The 10-year yield, like I've said on the weekly briefing, I'm still bullish on this, thinking that we're going to build at higher low points. So cautiously waiting for this. The appropriate time frame still remains the 4-hour chart in here. So there is still prices area to work on, but I think we have this second consolidative cycle, which is going to build its bottom sooner rather than later, just waiting in here for the prices to recover and consolidate to, and confirm that we've got that higher low point. If that's the case, then I think it's going to be fairly easy for the 10-year yield to go reach out and trade above the resistant context. The goal in here is just going to be to reverse it, because remember the long-term trend and the moving average is bullish, so normally the trend channel should be as well. So as we can eventually consider validating that bottom, which is still speculative for now, so remember, you only make money in the market when you take risks, and we're not trying to play gods of any sort. So right now, if this thing validates, it will open up the gains for my next profit-taking area. I'm basically having exactly the same approach on the 10-year yields that I do have for the S&P 500. I take some nice trades, not too much leverage, cautiously optimistic, and when we're reaching out to the next resistance, profit-taking, let the market consolidate, and try again. Let the market consolidate, try again. And that's exactly how I'll trade the S&P as well. But basically trading them on opposite direction. Okay, 10-year yields going down is going to be favoring the S&P 500. So when I start locking profits on the 10-year on the S&P, I generally tend to buy the 10-year. When I buy the 10-year, I let the S&P consolidate. When I profit take on the 10-year, I start buying again on the S&P 500, and I kind of have this arbitrage trade going for safe haven demand back into more risk taking on the assets. Though that's the strategy, and for now it's been working quite well. I don't even mention the forex market. As I said on the yearly briefing, it's too dangerous for you to trade in the shorter time frames, so let this one do its thing. USD WTI has a significant 4% move yesterday, but as you can see in the 4-hour context is still absolutely negligible, and as long as we are oscillating like that with bearish moving averages and stuff like that, it's still too early to call that a bottom in my humble opinion. Even though I would be buying this asset if it were to confirm a bottom, I don't see such probabilities for now. So cautiously looking at it, but not necessarily positioning myself for now on WTI. Then there is the crypto market, which is much easier to read in my personal opinion, because remember we've had a beginning of an H1 flow in here, which was basically trading above the moving average on the H1 time frame. Though let me just switch down to it. Though we're on long-term weekly supports in here, and same old strategy, trading the H1 flow. We had the first flow in here as moving average we were trading. Took my first entry in here, got stopped very quickly afterwards. Second entry on the volatility boundary. This one is still great, still holding well, and the trend is now validated. The flow is, it's not a trend, it's just flow trading. It's validated as we broke the previous high points. We just did it recently. So basically now my stops are at break even, and I let the market go up. The strategy in here is clear, is pretty simple. It's just I'm gonna let it happen that way, which means as long as the channel goes up, I am following it, not trying to anticipate any target of any sort. It's just as long as the channel goes up, I'm up. When the channel is reversed, I will take my profits on the third range boundary, and I goddamn don't know where this is going to happen. But until it, as long as it goes up, I'm not going to anticipate any bearish stuff. So it's more like I think now is the bull's time on cryptos, and we'll see how far this can be pushed. I've consistently said that people are extremely bearish in cryptos for probably bad reasons, though I would see, of course, if I was right or wrong with those flows. Of course, if I was right, let me be clear, it's gonna end up stupid with kind of a vertical invalidation of the bear trades, and basically this bull cycle will only terminate when the bears will capitulate and say, well, okay, maybe the bottom is in. That's exactly the type of psychology that I think we're trying to print on the charts. Though, of course, as for now, people still tend to believe that this is a short covering rally or yet another hope system. Well, I think there is more upside. And like I said, I have systems that I know backing that assumption as well. So as long as it goes up, I'm not going to do any fucking thing. I'm not going to profit take on cryptos. The time frames I'm trading on are much larger than the current short-term trading, even though I have some margin trade in Ethereum. But I do definitely separate the two, meaning that as long as this one goes up, I'm up on the margin trade. When it reverses, I'm taking the profit on the margin, definitely not touching anything on the longer term time frames. Anything that I bought on the weekly charts and the like we're so far away from even considering validations of the bottoms. So don't definitely mix these two things. Yet we still have to note the significant pump yesterday in Avalanche, which has been driven by a news from Amazon, basically going to make a one-click deploy of validators in AVAX. But even though I still have contrasted feeling with that news, it's definitely not a one-time event. There are several other projects which have been partnerships with Amazon on that front. And the second thing is still the entry price for a validator on AVAX is still fairly high, still leading me to believe that compared to the maturity of that project against Ethereum, it makes no sense. So I still believe AVAX will have significant milestone to reach in 2023. And even though I've been very violent and aggressive on my communication around that project in 2021 and 2022, for absolutely valuable reasons, by the way, this isn't less the case in 2023. The dangerous supply inflation and dilution that there was back then is still happening. It's definitely not terminated, but it's more, it's less violent as it was back then. So I am now certainly not bullish in AVAX, but I'm not bearish. Though in that perspective, as the whole fucking crypto market has been brought down to its knees, I still think there's significant retracement opportunities, AVAX being one of these. So same strategy in here. When you have some good news like that, there was no short-term trading opportunity, in my humble opinion, on AVAX. Though if that was the case, I would profit take. So I'm still trading on the longer term time frames in here, which we don't cover in those short-term updates. So same thing, if you ever sell in the lower 50% of a context, you just don't get it, okay? So to me, the bare minimum for AVAX to start thinking about profit taking on the time frames which I'm in is at least this $7 billion mark. So remember one thing, the indicators are there to help you that way. Whether you use indicators or you have manual plotted indicators, like I said, these things just basically draw trend channels. You could definitely do it manually. But the thing is that as long as you have a consistent set of rules that tell you what you can't do, and you know what you're doing and why you're doing it, this is how you have a consistently reliable trading strategy which you apply over time. So basically, yes, in here, like I said, it's bare minimum daily to weekly chart application on terms of context for AVAX. So yeah, if you can kind of end up to the conclusion that you have to profit take when you're below 50% context, make no sense, okay? We always trade bullish below 50% context, bearish above. It's really the way it is, okay? So right now is not a time to just say, okay, it's moving too quick, I'm profit taking. No, it's not that way. I mean, we've oversold these markets in a tremendously dangerous way. So I've always warned you about that. Even if your favorite token just pumps for 30% in a day, that doesn't mean it's overbought. It's definitely not the case. So don't be dumb enough to do it. Always take the assumption and remember what you were trading on. Which time frame are you trading on? And if you are daily or weekly, which you should, well, like I said, the first areas to consider viable resistance is far away. So don't be surprised with the high numbers and stuff like that. That doesn't mean we're going to get there in straight lines. It just means you should not consider profit taking until we at least reach out to those average values. That's the message for today. So don't mix up short-term trading and longer-term trading. It can be very, very easy to mix these two. Though what we do in these daily charts is to say, to me, the safest place to be now in crypto in terms of H1 to H4 timeframe trade is following Ethereum's flow, which is now much, much more mature because it's broken the previous high point. So it is not an appropriate time to go in. You should already have been in. So now it's just the time to let that trade ride as long as it can and don't try to stop the train. It would be stupid to try facing this and saying it's rising too quickly, it's going to fall back down, so I'm selling. Just don't do it. I'm not even talking about the short sellers who will just put their ass on the game without having the collateral to the upside. So it's really not the same thing, okay? Though be patient, cautiously optimistic. There's still a little bit of upside potential in the S&P 500. But as there is the CPI, I'd rather like to secure my trades because I couldn't find a perfect entry. So I'd rather like to pay for the stop loss and let the market ride. Same thing for cryptos with a slightly more optimistic vision, because we've gone absolutely outrageously bearish out there and there's still plenty of room to consolidate and invalidate the bear's case scenario. My humble opinion is that in crypto, this ride can stop when the bears will finally acknowledge that the probability of a bottom is eventually there. It's really the way that I think this market is going to trade. Like, we need to invalidate the bear's plan, at least in the cryptos. So this rally, I don't know where it's going to go, but I'm prepared for something goes really stupid. Like I've always pleaded, it's not a bull market, but it's never been a bear market. And in that perspective, just retracing to average value makes significant upside potential. So I don't know how we're going to get there. We can do multiple waves to the upside to get back there. But the same old target to me are retracing to the 20 periods moving average in the daily chart. So basically going in here. I think this is where all the projects are headed. Some will do faster than others. And I still tend to believe that the #1 favorite is Ethereum. This is where the trading scenario seems to be the clearest. And boys, the actual moving average is at 2,400. We're trading at 1,400. So there is still $1,000 improvement potential on Ethereum. And don't get me wrong, I wouldn't be surprised if we do that one in a straight line. I'm not betting on this. I'm just saying as long as it goes up, I'm not going to profit take the margin trades. It's really as simple as it is. The stops are now at break even. So if I'm wrong, I'm not going to take a loss. If I'm right, it's a nice fucking gain to take. That's the way it is. Don't be stupid enough to think that this is now the time to buy. Remember, it's not. It's just the time to say those who bought and took the risks back then should now enjoy risk-free rewards. That's the way it is. That's also the way to understand that there will be very few sellers now, but just those who are fighting against. Though don't be among those who short sell out and naked on these types of market. We've gone very, very irrationally low. There's still some people thinking we're going to go to $600, $700 Ethereum. I mean, doesn't sound any rational to me. It's still possible, like I said, but don't take these types of gambles. So until then, bulls, I have it under control. Volatility is going down. Markets are slightly more optimistic now, so don't be too bullish, but certainly don't be bearish too soon. Bye, guys.